Funding for Market Journal is provided by the Nebraska Soybean Board.
Animal agriculture is vital to Nebraska. Livestock production not only contributes to our food supply, but also helps our rural communities. Livestock provides revenue for schools, creates jobs, supports Main Street, and enhances the future for farm families. The Nebraska Soybean Board's Animal Agriculture Initiative works to encourage growth of responsible livestock enterprises to benefit agriculture and Nebraska.
Market Journal, television for making agricultural business decisions, is a presentation of the University of Nebraska-Lincoln Extension, where you can know how, know now. Promotional support is provided by the Nebraska Farmer magazine, and major funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Darin Newsom gives us his thoughts on corn and soybean markets. Ron Plain analyzes how the Porcine Epidemic Diarrhea virus could impact hog numbers. Brad Lubben explains where agriculture goes without a new 5-year Farm Bill. And Gregg Doud discusses the options for U.S. beef exports. Darin Newsom from DTN is our marketing analyst this week. We talked with Darin Thursday at the Nebraska Soybean Day and Machinery Expo held at the Saunders County Fairgrounds in Wahoo. The Fed has announced they'll start tapering. How big of a deal is that as it relates to agriculture?
You know, in the long run, it could be because there was this assumption that we were going to see the Fed start to raise interest rates, say in 2014. Right now, with this idea that we're going to bring a slower end to tapering, there's really more talk that we're not going to see that interest rate bump, that maybe not until 15, possibly as late as 2016. And if that's the case, all of this investment money that's been leaving the commodity sector, say for the last 2 or 3 years, could start to come back short term. They're going to look for markets with bullish fundamentals. So it's not just going to be a widespread buying back into commodities, into grains, but they could certainly start to pick and choose those markets that do have bullish fundamentals to put some money into.
You've been looking at stocks for a long time and doing math to try and figure out where the numbers actually are. I'll just toss it up for you here.
Right.
Sound off on what you think is actually in place.
Well, right now, if we look at USDA's demand projections for corn for the 13-14 marketing year, it looks way overblown, well overestimated. And even with that, we still see ending stocks in that 1.7 to 1.9 billion bushel range. But let's say that all 4 key categories of corn demand are overestimated. We could easily push ending stocks back over 2 billion bushels, much higher than that possibly, raising ending stocks to use up to almost or above 20%. The last time we were there was before the beginning of the demand market. We'd have to go back to 2004, 2005, before this whole RFS program kicked in, before the changes at the Board of Trade allowed more investment to come into corn and the other markets. So certainly a very interesting situation that has the corn vulnerable as we head towards the January report.
More importantly, probably in soybeans, where the USDA last month or last week, I guess, said that ending stocks were around 150 million bushels. Do you think that's accurate?
No, not at all. And I really don't know that anyone believes that number. In fact, they brought it down 15 million bushels from the previous month. But what they haven't done yet is they haven't accounted for all of the exports that we saw in the 2012-13 marketing year. It still doesn't match up with their own weekly export sales and shipment numbers. So, we've still got some wiggle room there. I'm guessing it's at least another 10, 15 million bushel less than that as far as U.S. ending stocks. And if we look at how the market's been behaving, we still see a great deal of demand coming from China. The market's still quite strong. We need to see if it's going to be strong enough to support the rest of the ag complex once we get into 14.
How do we end 13? Do you think quietly, or do people maybe try to exit?
I think a lot of it is the market's probably just going to end quietly. The year's going to end quietly. Then the key is all of this corn that was reportedly produced in 2014, when does it start to come onto the market? Is it the group that is just looking to sell when there's a new year, or are they going to sit back and wait for a better price? So one of those two events is going to happen. If it's the latter, then I think we see some strength in the market through the first quarter. If it's the former, if they're just waiting for 2014 to come, we could start the year off with a bang and we could immediately start to see some basis weakness.
Possibly in less than a month, the South American crop could be ready for harvest. What's your impression of what that crop looks like?
Right now, everyone you hear, even from our DTN contributing writers and reporters from the area, everyone's looking for a huge crop. The common theme seems to be 90 million metric tons in Brazil, 58 million metric tons production of soybeans in Argentina. We've accounted for those numbers right now, and the future spreads in soybeans really haven't changed all that much. But again, once we get into the actual harvest and once we get the logistics taken care of in South America, so it's going to take a while to get things to port, going to take a while to get ships out of port. Once that actually starts to move, the beans actually start to flow, that's when we can start to see the market break here in the U.S.
Next week, we'll take a larger look at U.S. and global economies with Virginia Tech Emeritus Professor David Cole. In related marketing news, the United Soybean Board said this week soybean exports for the 2012-2013 marketing year accounted for 56% of the overall U.S. soybean production. The United States exported more than 1.7 billion bushels of soy, including more than 1.3 billion bushels of whole beans. The value of the total shipments set a record, surpassing $28 billion. That's a 19% increase from the previous year. The top destination for whole soybeans was China at 772 million bushels. The next closest was Mexico at 98 million bushels. University of Missouri Extension economist Ron Plain joined us Tuesday afternoon to look at hog markets before the end of the year. As we mentioned in our previous episode, Nebraska has joined the list of states positive for the porcine epidemic diarrhea virus. I started our analysis with Ron by asking if the increasing case totals were amounting to a huge problem for the hog industry.
I'm afraid so, Jeff. PED is a virus, and like most viruses, they spread more in the wintertime. And as we've headed through fall, we've seen the number of new cases going up. We're over 1,500 farms now with the disease, and that's probably going to get a lot higher before we get through the winter. So yes, I think it's going to be have a significant impact on markets and the pork supply.
You think this does have a noticeable effect on market prices?
Yes, I'm guessing probably we'll see hog slaughter reduced by 1% or so next summer and higher prices because of that.
Do the current break-evens where they're at right now, Ron, does that offer profit for the producer?
Well, last few days we've been pretty close to a break-even situation. Hog prices have dropped into the upper 70s, and so not any profit being made right now. But I suspect December's going to, on balance, show a little bit of profit for hog producers.
What will attribute to a gain in that? Lower feed prices or higher hog prices?
Well, hog prices are a tad bit lower than a year ago. The key thing is that corn prices are $3 a bushel lower than a year ago, and so much lower break-even prices, and that's why we're making money here in the fourth quarter of 2013.
Yeah. The quarterly Hogs and Pigs report will come out next Friday, the 27th. Expectations on what we might see there?
Well, the breeding herd's probably going to be up a bit, fairing intentions up. The real important number I think everybody's going to be looking at is pigs per litter as an indication just how bad of a problem the PED virus is creating. The disease is very deadly on baby pigs, and people are going to be looking at that number, probably expecting the pig crop to be down a bit, and therefore, like I said, higher prices next summer.
For current production numbers, what are you seeing in terms of hog slaughter?
Well, hog slaughter has been running under the level expected in the September inventory report. We were down 4.5% in fall slaughter. Slaughter in recent weeks has been down 0.5 to 1%. Again, less than expected based upon the September inventory report. And I'm guessing we're probably going to stay down a bit as we move through the winter.
As for slaughter weights, Ron?
they're record high. The last 6 weeks have each set a new all-time record for weights. We're above 280 pounds on live weight for hogs at slaughter, running about 3% higher than a year ago. So yes, number of hogs we're slaughtering is down, but because of heavier weights, we're actually producing more pork the last several weeks than we did a year ago.
Attribution for that goes to what, do you think?
Well, part of it is the fact we was losing a lot of money a year ago and we're making money now. The weather has been conducive. Weights typically pick up in the fall, but the tremendous jump is a bit hard to explain.
Exports in October were down 12%. Is that something that should cause concern?
Well, we're going to be down this year. The last 2 years have each set records, so you can't not likely to keep doing records every year. So for the year, we're going to be probably down 9 or 10% from a year ago. Two countries account for most of the decline, Russia and South Korea. Russia has stopped buying U.S. beef and pork in a dispute over ractopamine in feed use. In the case of South Korea, they bought a lot of pork the last several years as they tried to eradicate a foot and mouth disease outbreak and reduced their meat production there.
So that could even continue into the future then?
Yeah, it's probably not going to change a large amount anytime soon.
All right, into 2014, your forecast for hog prices as you look at carcass and live weight basis?
Well, on a seasonal basis, we tend to see prices rally from the late winter to late spring. I'm expecting prices on a carcass weight basis to move from the upper 70s here in December to close to $100, a dollar a pound on a carcass weight basis come June or so. On a live weight basis, that'll put prices in the mid to upper 70s on per pound basis.
Again, the quarterly Hogs and Pigs report is to be released next Friday at 2 o'clock Central Time. The December Nebraska farmer says global demand for food is increasing in response to world population growth, but federal funding for ag research and extension has stagnated for more than 30 years. In this month's issue, Ronnie Green, the UNL Institute of Agriculture and Natural Resources Vice Chancellor, issues a warning. Lack of political support nationally for increasing public investments in agriculture is not only a wasted opportunity, but also a threat to national security. Green says challenges like climate variability, changing consumer demands, and pressures from animal activist groups must be addressed. He outlines those challenges in the December Nebraska Farmer. And coming up in our first episode of January, we'll sit down with Ronnie to talk about IANR advances in 2013 and what's ahead in 2014. It appears we'll enter the new year without a fresh 5-year farm bill. While the House passed an extension until January 31st, the Senate hasn't shown much interest in a short-term extension, and Senate Ag Committee Chair Debbie Stabenow has said she expects a new deal by the end of January. UNL Extension Public Policy Specialist Brad Lubben joined us Wednesday to discuss the latest in Farm Bill proceedings.
Well, it's interesting. The principal leaders of the Ag committees that have been leading the conference committee effort appear to have come up with their set of principles for where the Farm Bill should go. The process still drags into January, but we seem to have some framework now for what that final Farm Bill will look like.
The House, on their own, decided to pass an extension that would get them to January 31st. The Senate said, well, no thank you for that.
It appears at the moment we'll just let the already expired 08 Farm Bill just simply remain in limbo. Theoretically, we should re-implementing the permanent legislation from 1949, starting with dairy support programs that should take effect on January 2nd. The reality is USDA can't write program rules that quickly, so there's this leeway time even into January where we could still wrap up a new farm bill before we really worry about that permanent legislation taking effect.
One of the sticking points throughout this entire process was the nutrition title. Where do you think that ends up here?
Well, nutrition is one of, I think, 4 big areas where we'll see some points to remember. The nutrition title was a debate between the Senate that said we're going to cut no more than $4 billion over a 10-year period. The House originally said 20, and then in September passed a bill that said 40. How do you compromise? How do you get somewhere between 4 and 40? Well, the final principle seems to be that they're going to settle on cuts of about $8 billion, much closer to the Senate version, focused on reducing what's been called the heat and eat provision, assistance in the home energy assistance program that automatically qualifies you for a higher benefit level in the SNAP program. By restricting some of the rules for how that works, you could restrict enrollments, reduce payments, save perhaps $8 billion or more. That's one big provision that seems to settle at least the current debate on nutrition. We've got some other issues in the other areas too.
Where do you think commodity programs will end up? We've talked about this a number of times.
Right. You know, of all the options and all the discussion, we seem to be revolving right back to the original debate, price versus revenue. The House's proposal had a heavy emphasis on a price-based safety net, updating target prices. That seems to be part of the final solution. The Senate had been pushing a revenue safety net, a modification of acre. That seems to be part of the final version as well. We don't exactly know what that looks like. Is it the farm, or is it the county, or is it a choice of the two? That remains to be seen. But clearly it seems like we're going to have a basic debate. Do you want a price-based safety net, or do you want a revenue-based safety net going forward?
CRP acres will go about where, do you think?
Will go down is an easy answer here. The House had proposed a cap of 24 million acres. The Senate had proposed a cap of 25. It appears that we're going to settle around 24. That's really a recognition that the CRP has been shrinking. At least generally enrolled acres have been gradually coming out and returning to crop production. What remains in the CRP is more focused on those priority enrollments, and that seems to be the future as well.
We'll have more with Brad in 2 weeks when we'll look at progress on free trade fronts. The USDA's December livestock outlook raised the agency's estimate on U.S. beef exports to more than 2.5 billion pounds after strong numbers in September and October. Yet in 2014, the USDA is currently predicting exports will drop to 2.3 billion pounds, which would be a decrease of 8%. At the recent Range Beef Cow Symposium, we sat down with Gregg Doud, the president of the Commodity Markets Council, to discuss global beef trade and possible markets for U.S. beef. Gregg has previously been the chief economist for the National Cattlemen's Beef Association and also spent time on congressional staffs, including that of Kansas Senator Pat Roberts. I started by asking Gregg to quantify the importance of beef exports to the average cattle producer.
Well, historically, they were a small portion of what we did, and it was kind of a niche business. But in today's world, exports are worth about $300, or about 17% of every fed steer heifer that we sell in this country. And so you have going to be nearly $6 billion, 5.5, I think this year, $6 billion next year in beef exports. And historically, the markets are Japan, Mexico, Canada, and South Korea. The Canadian market is always kind of there because we're, Grand Island, Nebraska is 1,000 miles closer to Toronto, Canada, where all the people live, than Calgary, Alberta is. So the Canadian beef flows into the west coast of the U.S. We sell $1 billion worth of beef into Toronto is kind of how that works. Mexico is a huge Mexico City market, but the Asian markets are where it's at. And coming forward, huge development with regard to China. It is growing by leaps and bounds. It's doing what soybeans did 10 years ago. It is exploding. And I think that's the thing that we really need to be positive about on the beef side, is that here comes China.
What would it take for the U.S. to gain a major share of that market?
Well, first of all, we've got a market access issue.
Right, exactly.
That we have to deal with there, and it's going to take time. And part of that was our own undoing years ago when we began to do some non-tariff trade barriers with regard to discussions with China that really backfired on us. And so often on all of these ag trade issues, we can be our own worst enemy. And this is an issue of the one final piece in the post-BSE discussion and market access that we've still got to fix. But the market is there. They're now the biggest beef importer in the world, exceeding the U.S., growing now by leaps and bounds. 80% of what they're taking is from South America, but they like U.S. grain-fed, and that's where we need to go.
Is it realistic to say within the next 10 years maybe they'll lessen some restrictions and the U.S. will have more access in that market?
Oh, I'd like to think within the next year or two that we could do that. I mean, it's already almost a $750 million market. And I think we are well positioned to take advantage of that. And I think the point here is that the price of beef the price that China is paying for beef today is nearly what it is in the U.S. This is not the market that it was 10 years ago when we were last in there. It is a very well-developed restaurant-style market, just like you would see in South Korea, frankly. And the potential there is enormous. It's the strong underpinning under these markets that it's the one thing I think the message is we've got a real solid foundation under these prices because of this international demand.
As you mentioned, Japan has historically been a good partner for the U.S. Does that continue forward?
It does. We finally, earlier this year, were able to get Japan to 30 months, and this big discussion over a trade agreement called the Trans-Pacific Partnership, I think in the coming year, 2014, there's a really good chance that we could actually wrap that thing up and bring Japan, really a backdoor free trade agreement with Japan, that at a 38.5% tariff, if we can bring that down, it makes Japan just an outstanding market for us going forward.
And you said today that natural gas production in the U.S. could help that?
It actually is one of the interesting discussions, is that after Fukushima and the disaster they had in Japan, they're switching away from nuclear, switching towards natural gas, and lo and behold, the U.S. is now a big player in that industry and that market. So I think there's a discussion there and a relationship that could really be of benefit to U.S. agriculture and in particular U.S. beef producers.
Cow-calf producers and feedlot producers both now know Zomax well. It's used as a beta agonist across the seas. Is it a big issue?
All of the technology that we use in agriculture in the U.S., whether it's GMOs, Optiflex ractopamine, all of the advantages that we take for granted sometimes in agriculture in the U.S. are big issues with customers around the world. It isn't as much they're opposed to it as they want to better understand it, and sometimes we get in a situation where politics get out in front of the science, and that causes real problems for us. We have to continue to work on communication and explaining the technology. Even on the GMO issue, we take it for granted here. Overseas, it's still nothing is taken for granted. We have a lot of education that we have to do.
But you feel that consumers there are open-minded and willing to listen?
In some cases, yes. In some cases, for example, Taiwan with regard to pork, they've indicated that it'll be a long, long time before they're willing to accept that. But there's some other issues there related to what's happened in those markets with things that we've banned in the U.S. a long time ago. They've had problems with their own producers. And so there are issues and concerns that really, frankly, have nothing to do with us that we have to understand as we work with them to be able to use these technologies.
These are obviously big macro issues that we're talking about here, but do you think it's important that producers sort of keep an eye on these things on a daily basis, and how better can they be informed on things like these?
I think the big thing is they have to be able to explain the technology to the housewife in their neighborhood, the housewife in Lincoln or New York City. We in agriculture must do a much better job of explaining why we use this technology and the benefits of this technology, just not for us in our own economic situation on the farm, but for the benefit of consumers as well.
Now, with his last weekly weather forecast for 2013, here's UNL Extension State Climatologist Al Dutcher.
Well, folks, here we are again. This will be the last forecast of 2013 with the university shutting down. And once again, we have another storm system that's going to make its impact across a broad section of the country. Currently, we have that storm system just to the south of us, and it's moving in a northeast direction to the Great Lakes. And Nebraska sits on the northern periphery of the heavy snow band. So if this storm system does lift up at least 100 miles toward the north, we'll be looking at some significant snowfall across southeast, east central, and portions of south central Nebraska. At present track, we're looking at minor accumulations, generally less than 4 inches across an area south and east of Omaha to essentially Lincoln to probably Hebron. But again, northward placement of the storm system puts us into a much more significant precipitation event. So let's take a look at the upper air models and see how this storm is going to progress and what we might expect as we move toward the Christmas Day period. As we go to the upper air models, here's that storm system that's ejected out of the southwest. It's now moving its way up toward the Great Lakes. The cold air is in place. Right now, southeast Nebraska is estimated to have anywhere from 1/10 to 1/4 inch of liquid equivalent precip. Based on the air temperatures, that would translate to 1.5 inches to upwards of 3.5 inches of snow. If it makes a little bit farther northward placement, we would be looking at much more significant snowfall across portions of southeast Nebraska as we have winter storm warnings all the way from southwestern portions of Kansas northeastward through southeastern Iowa. Again, that northward placement really jumps our precipitation totals up and snowfall totals up almost double in the areas currently projected to see 1 to 3 inches. Now, as we go to tomorrow, this system will rapidly pass toward the northeast, and we'll see the cold air behind it. So basically in and out clouds for most of the day. A few flurries are possible across northeast Nebraska. Temperatures are hard pressed to get out of the low teens across northern Nebraska, and we'll probably be very close to the 20-degree mark across extreme southern Nebraska. Now, as we get into Monday, this system kind of deepens over the Great Lakes, and we might get some cold air wrapping around it and bring some flurry activity. Extreme eastern Nebraska, definitely some clouds. But in western Nebraska, the ridge tries to build in, and we'll get a little bit of warming conditions. We may actually break the 30-degree mark across the panhandle region of the state. Now, as we get into Tuesday, we see that that ridge moves toward the east. We get another little trough trying to work in, but the flow as it comes across the mountains will be pretty much zonal. Doesn't have a lot of moisture to work with, so at the best we'll be looking at some scattered flurry activity, particularly the panhandle. And then on Wednesday, that energy pivots around another piece of energy across the Dakotas, and some of this may actually move across northeastern Nebraska during the late afternoon, evening hours, and some of that may actually reach down into southeastern Nebraska before Thursday morning. But otherwise, it doesn't look like much in the way of significant accumulations. Then we start to see a warming trend on Thursday as the trough moves east and warmer air moves into our region. And on Friday, we see the ridge building in, so it looks to be fairly nice conditions. Might be a little bit of a cool down in northeastern Nebraska. The temperature forecast looks very cold with this chance of snow this weekend. Gradual warming trend through Christmas, and then we cool down for the remainder of the week. The 8 to 14 day forecast indicates the cold air will continue, and in terms of precipitation, a dry trend is indicated through the remainder of the year.
Thanks, Al. Today's interviews with Darin Newsom, Ron Plain, Brad Lubben, and Gregg Doud are available individually on the Market Journal website and through our mobile app as part of the December 20th episode. Next week, we'll look at estate planning for farmers and ranchers, and Elwyn Taylor will join us to look ahead at possible weather scenarios for 2014. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Facebook and Twitter. Promotional support is provided by the Nebraska Farmer Magazine. Funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up. Market Journal is produced by the University of Nebraska-Lincoln Extension, where you can know how, know now. Funding for Market Journal is provided by the Nebraska Soybean Board.
America's export of soybeans helps the U.S. maintain a positive agricultural trade balance. Nebraska contributes half of its soybeans for export. The protein and oil content in soybeans enhance the growing demand for higher protein diets. The Nebraska Soybean Board promotes research to develop new soybean varieties with higher protein and oil content for major agricultural markets. The Nebraska Soybean Checkoff, growing opportunity from the ground up.